The Fed kicked off its two-day meeting today, and markets were rejoicing thus far. Of course, the more important day is tomorrow. But as of now, we do know that all of our key equity indices here in the United States closed higher today. Not only that, but for the first time in many, many months, all four key U.S. equity indices hit an all-time high on the same day. And yes, that includes the Russell 2000, which for a long time had been a laggard within these markets. So we'll take a look at all of that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a stock that didn't fare so well today. In fact, it got smoked to the downside, but might be setting up as an interesting put-selling opportunity for a dividend investor. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 2nd, 2021. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel, click subscribe, and while you're over there, check out our description down below where you can sign up for our email distribution list. We're also heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. We really appreciate those of you that click like and retweet on the tweets that feature this Market Outlook video as well. And then last but not least, we do have a presence over on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's jump into today's trade activity. And as you can see, I've got chart 4B pulled up here in front of us for those of you that are premium market scholars that are following along at home. And as mentioned in the intro, it was quite an impressive showing here today. The S&P 500 was up 0.37%. Dow Jones was up 0.39%. NASDAQ Composite was up 0.34%, and the Russell 2000 was up 0.16%. Now notice what I mentioned in the intro as well. For the first time in a long time, I'd have to go back and check on this, but it's been a long time, I can assure you, that we have had all-time highs on all of our indices. Now, I wasn't with you yesterday, so it's possible this happened yesterday as well, and perhaps David talked to you about that. But for all of the very recent months that I've been doing this video, we have not had this particular situation where these green tags are lit up on all four of these charts. So that makes it a little bit different. Remember, the Russell 2000 had been a laggard. These other large cap indices had been hitting new highs for a while, but the Russell 2000 has been kind of a little bit of a laggard. Let me expand this a bit, and then let's take it back a little bit further in time. Let's do a 1-year daily chart. And you can see that back here on March 15th, was the last time the Russell 2000 put in a high, and today we were able to get up and over that just barely, but you can see the new high tag is now over today's candle over here. Whereas if we look at some of the other indices, they were obviously hitting highs during the summer. You wouldn't have had to go all the way back to March. So wanted to share that with you because that is something new and something different. Now remember, in most eras, that's not particularly strange. When stocks are strong, it usually affects them all positively to one degree or another, but it's just a little bit different during this particular moment in time. Now keep in mind the Russell 2000 is market cap weighted, and it does have a fairly big presence with stocks like GameStop, and there's been a lot of kind of peculiar behavior going on, to say the least. GameStop has kind of started to click into gear here more recently once again. You can see that it was up 3% today, but it was up really nicely yesterday, so that really helped it along. We also saw something peculiar happen today with CAR. Now this is Avis Budget. Let me maximize this so we can all kind of get the grasp of what actually happened here today. But this is ticker symbol CAR, Avis Budget. And yes, you're reading that correctly. It is not a misprint. It was literally up over 100% today alone. It was up $185 per share and closed today at $357 per share. Now keep in mind, if we were to go back on, let's say, like a 3-year chart here, that this stock got as low as $6 per share there were people that legitimately thought that this rental car stock was going to literally go bankrupt. And, it's you did not necessarily blame the philosophy and the analysis around that. It was looking really ugly for a number of those companies during the coronavirus. But this is a good example as to why you've got to be extra careful if you are short selling stocks, and you have to know what your get out of your chart moment is, or your ripcord on your parachute, however you want to think about that. But a reminder that stocks do not have ceilings to the upside. They can go up hundreds of percent. In fact, one of my students has been in Microsoft for the last 6 or 7 years, and she has a non-upple in her account right now because of the dividend reinvestment that's gone along with it. In other words, it's gone up 900%. And that pales in comparison to what you see right here with Avis Budget. And we've seen other things like this over time as well, whether it's the aforementioned GameStop or just normal companies like Netflix have literally gone up thousands of percent in the last decade or two. And so you've got to be extra careful when you're short selling, as there is no ceiling to the stock market, whereas when you're buying stocks, there is a floor. That floor is zero. As long as you're not using margin or doing other peculiar things, you will stop losing money once a stock goes to zero. But when you're short selling a stock, your losses can become unbelievable to the upside, and I have a feeling that's kind of what's taking place right here with Avis Budget. There was a lot of people that were short selling this, and it just fed upon itself here today as the stock exploded higher by over 100%. There was also a peculiar thing happening after hours. Now, this chart probably is not going to capture it, but it's Bed Bath & Beyond, and it had a fine regular session. It was up 9% today in the normal session, which you see right there. But that is not the peculiar part. The peculiar part is what's happening after hours. I know this is probably hard for those of you watching on a phone to see, but I'll just read it to you that the bid currently is very close to $30 in the after hours session as we speak. And you can see that it closed at 16. So in other words, Bed Bath & Beyond is up nearly 100% after hours here tonight. And similar to Avis Budget, there's been a lot of people that have felt like Bed Bath & Beyond is the type of company that would go bankrupt eventually, similar to like a Linens and Things, or Sears or Montgomery Ward or JCPenney, these types of companies that were once powerful retailers that had fallen onto hard times. But Bed Bath & Beyond tonight is announcing a bit of a partnership with Kroger. At least that's what the headlines I saw were saying. So anyway, this is another example of a stock that is going to absolutely cook the short sellers tomorrow. So if you didn't know it before and you're somewhat newer to the markets, just tread into the short selling arena a little bit more carefully and make sure that you know where your ripcord is and when you plan on getting out. Otherwise, you could end up having a massive amount of margin calls and a lot of pain and frustration that is pretty much not necessary. Remember, you don't have to be a genius to succeed in the stock market. You just have to be able to pick reasonably strong investments and be willing to hold them for the long term if you're a long-term investor. Otherwise, hopefully, you'll pick up some trading tips here and there from YouTube videos like these if you're a little bit more active in your trading exposure there as well. But anyway, let's go back over here and take a look at the foregrid once again on the market forecast indicator. And you can see that the background colors of all four of our charts right now are that dark green shading, telling us that we do have a strongly bullish posture on all four of these charts. Now remember, that is not anything new. The background color has been dark green since going back here to October 18th on the S&P 500, October 14th on the Dow Jones, October 19th on the NASDAQ Composite, and October 13th on the Russell 2000. So this is more of The same thing that we've been, preaching to you for the last couple of weeks at this point, is that the indicators still suggest bullishness. Now, at some point, you'd figure that there is going to be some sort of a little bit of a give back, but remember, we are in a seasonably bullish time of year. As mentioned in the intro, we're in the midst of a 2-day Fed meeting, so it is possible that Jay Powell comes out and scares people tomorrow. Of course, everybody is always wondering if there's going to be any tapering that gets announced, or any more, buying back of, securities, or perhaps, reducing the Fed balance sheet. There's a number of things that the market has on its mind. But for the most part, I would say that we happen to be in a fairly bullish position right now, both with the stock market from a seasonality perspective and a supportive and accommodative Fed. So all of those things boiled together give us this very pretty picture here of all-time highs across the board on all 4 major U.S. equity indices here. Let's go ahead and take a look now at our 3 green arrows chart. And I'm assuming that we'll probably have 3 green arrows. Yeah, we do. We have 3 green arrows on all 4 of our charts at this moment in time. Again, that is not anything particularly new, although I will say here for the Russell 2000, we had a couple of days off there where we had some red arrows slip in on the MACD histogram and the stochastic, but that was quickly unwound yesterday with that epic rip higher in the small caps yesterday and has continued today. So we're back to 3 green arrow status there. With all the other 3 charts, the large cap indices, we've been in 3 green arrow status for the last 2 or 3 weeks. So again, more of an acknowledgement that it continues to be bullish, as it has been for pretty much all of the days in the last couple of weeks. So good signs there across the board. Let's go ahead and pop on over here to the internet briefly. I always like to get a chance to say thank you to those of you that help support this free video that we do voluntarily for you guys. And you can see that 99 of you clicked like for me last time around. As I've mentioned many times, that I'm shooting for 100 likes or more, triple digits, nice easy number to remember. We didn't quite get there. We were 1 off, and that one was an important one this last time around. Many of you know that on Thursday I opted not to do the video as I ended up having parent-teacher conferences and some other things going on that day. Now, as I always say, if I get 100 likes, I will prioritize the video. If I don't get 100 likes, then I won't prioritize it. I'll look at my schedule and see what else I've got going on. So that day, I had 99 likes, 1 away from doing the video. Now, I'm sure my son was happy that I got to spend a little bit of extra time with him there, but had I gotten 1 more like out of it, I would have ended up doing the video late that night or something. So just a reminder, if you want us to do the videos, help support it. Do your best with that, and only takes 5 seconds out of your time, so I think most of you are able to accomplish that. Also, while we're over here, I wanted to show that I posted something to our website today that many of you will have access to because it's something that is available for free. It's not behind a paywall or anything like that, and that is our dividend growth investing tweet, or not tweet, but post, I should say. It's also listed there on Twitter if you're looking for it, but you can also come over here to our website, and you might find it here under the popular recent posts area. Otherwise, hover your mouse over blog, click on dividend growth investing, and there you will see the list of all the companies that raised their dividends last month. I went through these in my dividend growth investing class today. For those of you that are Plus and Premium members that might want to check out that recording. Otherwise, if you just want to kind of evaluate the information on your own, you're welcome to do so, and feel free to share that with anybody else in your life that is interested in dividend growth investing there as well. But some very popular companies raised their dividends last month, like AbbVie, as an example, raised their dividend about 8% there. We also had Phillips 66 raise their dividend. We had ExxonMobil raise their dividend. Visa raise their dividend. So there are a number of them. Feel free to check that out on your own time. Also, while we're over here, check out the sector selector. Notice that energy stayed number 1. Financials stayed number 2. Now, this was actually the 5th straight week for both of them to maintain rankings number 1 and number 2. Real estate managed to come in at number 3 for the 2nd straight week, We actually had a very interesting dividend increase announcement after hours here tonight. Some of you saw me posting on Twitter that CubeSmart, which happens to be a stock that we actually own in my top-down trend trading class, increased our dividend by 26.5%. That is amazing. And so normally, for those of you that aren't familiar with dividend increases, somewhere between a 5 and 10% increase is generally considered quite good. So a 26.5% increase out of CubeSmart, ticker symbol CUBE, was extremely impressive there. But anyway, those real estate stocks have managed to kind of hold up a little bit better more recently. We'll see where that takes us. Remember, they do have some interest rate sensitivity there, so we might end up seeing some movement tomorrow depending upon what Jay Powell says out of some of those securities. I also noticed a big story after hours tonight with Zillow. Zillow is getting out of the house flipping game, and their stock was down huge after hours tonight. And so I don't know if that will have any sort of an impact on real estate prices in general, but it is just something to kind of stick in the back of your mind there as we march forward. One thing I did want to point out is that information technology made a really nice move over the last couple of weeks. That area had been out of favor in September, and then has recuperated much of those losses along the way on the backs of stocks like Microsoft that have done so well here in the last few sessions. And so we do have technology back into the top 4 there. Notice that communication services is now dead last, down there in the 11th position. Remember, that's where you're going to find your social media stocks like your Snapchat, and I'm going to have a hard time flushing this out of my system, but it's Facebook/Meta, right? Their new company name. So it'll take me a while before I'm used to saying that. But Meta or Facebook, however you want to say it, it has not been doing so well in the last month or so, and so that's caused a little bit of concern there within those communication stocks. All right, let's get back on track with some more analysis on the Thinkorswim platform. And let's pop on over here to our 12 grids now, starting with chart 5A. And this is our asset class 12 grid. A reminder that the background colors of these charts will tell us whether our current intermediate posture is bullish or bearish. Naturally, the pink background colors are going to be the bearish charts, and the green background colors are going to be the bullish charts. So as we look at this here, you'll see that we have a nice healthy mix of bullish and bearish ones. But since interest rates have been a big story here more recently, let's kind of start there where you can see 10-year Treasury yield did fall here a bit today. We ended at 1.54% on the 10-year, and you can see that after kind of topping out back here on October 22nd, we've really seen interest rates falling since that time period. And it sits at a very precarious point as it stands right now, which is right on that rising 30-day moving average. We closed just a hair below it here today. So it'll be interesting if the comments tomorrow out of the Fed put some life back into interest rates. If that's the case, remember that tends to benefit financials a bit more than utilities and REITs. Otherwise, if it breaks down from this level, then you've kind of got the opposite, where you might have a little bit of give back in some of those financials, and utilities and REITs will perk up a little bit again. So going to be interesting. Tomorrow's going to be an important day for that conversation, but at least for today, we do know that interest rates fell, and we are sitting at a level of support there. Now, of course, when interest rates fall, bonds generally rise, and that is what we saw here today. TLT, which represents long-term U.S. Treasuries, was up 0.44% today. Foreign bonds, represented by BNDX, was up 0.37% today. And even high-yield bonds, aka junk bonds, were up 0.24% today. Now, notice that of those 3 bond charts there, the high-yield bonds one looks a little bit different because it still has the pink background color telling us that we have a strongly bearish posture on it. It's still below that falling moving average. Notice that foreign bonds are also below their falling moving average, but their posture is actually considered weakly bullish right now since the intermediate line is at 27 and rising. And of the 3, it does look like long-term U.S. Treasuries are in the strongest position from a charting perspective, because here you'll notice that the background color is the dark green shading, not the light green, so telling us that we have strongly bullish posture on the intermediate line in the market forecast. And in addition to that, we are trading above the moving average. Remember, that had not been the case up until about a week ago. We had this entire time period where it was below the moving average, and then about a week ago we got above it. And the longer it kind of hangs out above that moving average, the greater the chances that moving average will start bending higher once again. So keep your eye on that possibility there. Right now, we're kind of stuck in the middle of the range. This might actually be an interesting place to do an iron condor on something like TLT. Of course, again, just expect some volatility tomorrow around 2 p.m. Eastern Time when the Fed statements come out, and then also the follow-up conference call or interview with Jay Powell will also kind of move markets there in all likelihood. Notice down below that we do have the U.S. dollar rising today, up 0.24%. It is back above its rising 30-day moving average with that tip of the moving average green in this case. But notice the background color remains light pink, telling us that we have a weekly bearish posture. So you kind of have opposing thoughts there on UUP here currently. I think if it were me, I'm kind of still leaning more bullishly here as it seems to be kind of riding that 30-day moving average higher, with the exception of that kind of wonky day right there on the 28th. Notice that with the dollar up today, shouldn't be a surprise to see gold down. It was down 0.21%. Gold also has a weekly bearish posture and is trading above a rising 30-day moving average. Similar to TLT, I think this kind of represents an interesting place for an iron condor on gold. Remember, we did have an iron condor on gold for our trade application example a month or so ago, but it did expire at max gain there in the October expiration period. So I might very well keep that one on my radar for a future trade application example where we can put it back on and see if we can benefit from gold continuing to move sideways there. In terms of the charts up at the top now, you'll notice, as mentioned before, the S&P 500 hit a new high, so U.S. large cap stocks doing really well here. They're actually outperforming developed foreign stocks and emerging foreign stocks. Of those two, of the foreign variety, the emerging market stocks appear to be kind of breaking down right now below their moving average once again. There was some optimism here maybe 2 weeks or so ago. We saw a few of those Chinese stocks making a decent move higher, but if you've looked at stocks like Alibaba or Tencent or some of those Didi, those types of companies more recently, they've started to fall once again. They're not at their lows, but that enthusiasm that was around that kind of dead cat bounce seems to be fading a little bit there, and you're kind of seeing that play through in the emerging markets here. Similar to gold and TLT, that could very well be an interesting place for an iron condor on EEM there as well. Whereas with EFA, it's a little bit more stubborn and bullish to the upside. Notice that EFA has the dark green background color, so we have a strongly bullish posture there. And we also now have a green moving average with price above that rising moving average right there. Let's go ahead and take a look at our sector analysis now. This will be chart 5C here. And so this is a pretty good view if you liked being long stocks, at least. For those of you that are long-term investors, I'm sure that you've appreciated the market rally that we've seen here in the last month or so after things felt a little bit more dicey during the month of September. So as you can see here, green across the board with all of our sectors. They didn't all finish higher today, but the background colors of the charts are all green, telling us that we do have bullish postures according to the market forecast on all 11 of these sectors. Now be aware that the communications does stand out and deserves a little bit of an asterisk there, because yes, the background color is green, but it's that lighter green shade, whereas all the rest of the sectors have the darker green shade. So of these 11, communications appears to be the one that is the least bullish of the batch. You can see it's also trading right on the underside of its falling 30-day moving average there. And that's the only chart on the board that looks like that. All the other charts you can see actually have a green tip, and that's somewhat new. The staples, which is actually the sector that we covered here today in my dividend growth investing class, has had a nice rally in the last couple of days, and it's been enough to push that moving average higher. A week ago, notice that it was that yellow moving average where price was above a falling moving average. Today, things have changed. We are now having price above a rising moving average, which is a bullish feature. So that's a more recent change. And we also had a more recent change on utilities as well, where that happened, I think, 3 days ago, where it transitioned from yellow to green. And prior to that, it was, of course, red during this time period back here. So we've seen more kind of resilience in a lot of these charts. They're not all kind of follow through and continuation moves. There's some of these are turnaround plays, like we do see there with utilities, staples, and even healthcare. Healthcare has kind of changed its color on its moving average here within the last week or so as well. Now, our more resilient charts to the upside or continuation of trends kind of belong to those areas that we've been talking about for a while now, which is financials up on top, energy off to the right, and then also consumer discretionary deserves an honorable mention, as it has been persistently strong to the upside for the last 3 weeks or so. But keep in mind, this is a market cap weighted version of it, so much of this crazy behavior here out of discretionary is as a result of what we've seen out of Tesla specifically. Take away Tesla, and I think this chart will look quite a bit different there. But at least we do have bullishness across the board, regardless of which of these areas you're looking at. Now, speaking of discretionary, our trade application example tonight will be from that discretionary space. And as I mentioned in the intro, it's actually going to be a stock that got blasted here today. So let me explain what we're going to do by coming on over here to chart 2A. This is our dividend stair-step chart that helps us analyze long-term potential in securities that might be on a little bit of a rough patch more recently. And the stock I want to pull up is Leggett & Platt. This is ticker symbol LEG. This is a 10-year chart that we're looking at here, and most of you are familiar with the idea behind the chart, but if you're not, be aware that the blue zone at the bottom represents an area where it is perceived to be a good long-term position in a stock that pays a consistent and rising dividend. And the orange zone up at the top would be an area where a long-term investor would view it as overvalued. And remember, the mindset is nearly 180 degrees different if you're a trader. If you're a trader, you're oftentimes buying a stock when it's in the orange zone because you're playing price momentum until it changes. And you're probably staying away from the stocks in the blue zone because they're exhibiting relative weakness. So it depends upon who you are. I myself am a long-term investor, so I kind of cater my thoughts a bit more to the long-term side of the equation, whereas David is a little bit more on the short-term side of the equation, so he's going to feature charts that have a lot more relative strength. But in this case, you just ask yourself a simple question. If you wanted to be a long-term investor in this company within the last decade, where would have you liked to have bought the company? And naturally, you're going to be seeing some of these areas in the blue zone that stand out to you that look like they were attractive times to be looking at it for the long term. Well, Leggett & Platt, like so many other companies, fell out of favor during the coronavirus, and the stock really got blasted. This is actually a dividend aristocrat, so while it's not the most well-known company on planet Earth, it is big enough to be in the S&P 500 and has raised its dividends for more than 25 years in a row or more. And so it's kind of rare to see a dividend aristocrat go from $55 here in November of 2019 all the way down below 25 at the lows of the coronavirus. Usually you don't see big blue chip aristocrat types of companies drop that quickly, and that severely. But this one is one of the smaller aristocrats out there and not as well known and doesn't have the institutional support and different things like that. Well, as we kind of got a hold of the situation in terms of the coronavirus and the economy opened back up again, like a lot of other companies, it started crawling out of the bottom. And it went from 25 bucks in this case to actually getting all the way back to an all-time high, believe it or not. So for as dramatic of a drop this was from 55 down to 25, it's even more impressive that it was able to eventually overtake that all-time high within just about a year or thereabouts. This is a company that makes springs for mattresses and other furniture like that, for those of you not familiar with it. Well, more recently, it's fallen out of favor again. So after topping out at around 59, it's fallen all the way down here to 43, and today was a very ugly day for the company as it reported earnings. It was down 9.5%. Now, on days like this where people are pulling their hair out and volatility is rising dramatically for this company specifically, those are days where I want to be a little bit more brave. And so now that this is kind of falling back towards this blue zone once again, this is maybe setting up an opportunity to do what's known as selling a put. For those of you that are not familiar with that options technique, it allows you to try to purchase a company at a cheaper price than where it's trading here currently, and in return, you will receive a premium or a credit up front that is yours to keep and do whatever you want with while you're waiting for the stock to come down to lower levels. You're effectively taking on somebody else's risk. By selling a put, somebody else is buying it from you, and that person on the other side of your trade might be using it to hedge their long position. They might be using it because they think the stock is going to continue to fall. But just like in the stock market, there is somebody on the other side of your trade in the options market as well. So you are effectively taking on somebody else's risk. You can kind of think of yourself like you are the insurance company in a transaction like that. Where, if you're thinking about it in terms of like car insurance and your Geico, you receive the premium money. The person who is the policy holder is paying you, money in order for you to offset the risk of them wrecking their car. Now, we're hopeful in this case that today was as bad as it gets and it doesn't continue to crash and continue to go lower and lower at dramatic rates. But what I ended up doing was selling the January 35s, and remember, those of you that are premium members would have received the update in our Telegram, so we always let you guys know early what trades we're doing before the folks that watch the free video at night have the opportunity to see the trade. So feel free to check that for the trade details, but I did want to explain one thing around that, which is normally I would not go out to the January contracts. Normally it would be the Decembers that I would be focusing on right here, right now. But unfortunately, because this is not the most well-known company out there, it doesn't have a whole lot of strikes available to trade. If there was a 37.50 that was available in the month of December, I likely would have been targeting that one. But unfortunately, it doesn't exist. You either had to go with the 40 or the 35. And since the 40 would still be above the blue zone, I didn't really want to go that direction. So I opted to take on a little bit more time than I normally would. So rather than going into the month of December, I went into the month of January, where I was still able to get more than 1% return on risk for targeting the 35. So now what I'm on the hook for is buying this company at $35 per share if it closes below there in the middle of January. If it doesn't, then I get to keep the premium that I took in today for selling that put. Okay, so that's the trade idea here for today. Try to take advantage of other people's fear with a stock that was down 9% today, but is now approaching a more rational place to purchase the company for the long term, and for Leggett and Platt specifically, that is anywhere below 37.5. Okay, so that's what I had for you here tonight. Hope you got value out of the presentation. If you did, I ask one simple thing out of you. Just click like for us there on Twitter. That is, if you want us to prioritize these videos. If you don't want us to prioritize the videos, then of course you don't have to click like and do anything there. So I'll leave that up to you in the end, but I do know many of you will do your best to help support David and I with this project there. So I hope you got some value out of that, and I hope you all have a great rest of the evening. And of course, remember that tomorrow is going to be a big day with some potential Fed statements that might end up shaking up the markets there a little bit, and David should be back with you tomorrow night to kind of talk you through any of those movements along the way. And then hopefully I'll end up seeing you on Thursday here as well. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.